Good afternoon. Thank you for joining us today at the CBD Talks event here at the CBD Digital Lab. I'm joined with Divya Abrol Gambhir. I want to pronounce that properly. My name is Mukhi. I'm from Commercial Bank of Dubai, and I'll be moderating today. If you have any questions for Divya, please share them in the comments and we'll answer them towards the end of the session. Before we start, I'd like to introduce our special guest. Once again, this is Divya Abrol Gambhir. She's a partner in the Banking and Finance Department at Tamimi Company, a leading legal firm in the MENA region with 17 offices across 10 countries. She leads the firm's financial regulatory practice here in the UAE and is specialized in a number of things, including financial services regulations, private banking, structured finance, capital markets, including debt markets, in addition to general corporate banking and advisory. It's a lot of things. Divya regularly advises on matters relating to licensing of financial institutions and the provision of financial services in the UAE and the IFC, banking and M&A, and restructuring, conduct of business compliance, and AML and Fintech. So I'm going to jump straight into it. Firstly, it's a real pleasure to have you with us, a specialist in so many things.
Well, thank you very much for the opportunity and to discuss this very topical subject.
It's great. And, you know, of course, the UAE is growing incredibly fast in this space. So first of all, before we sort of dive into it, could you describe the UAE regulatory landscape and how the UAE regulatory landscape differs to other markets?
Sure. The UAE is actually a fairly complex legal and regulatory jurisdiction, and in relation to the provision of financial services and the conduct of financial services, the licensing of financial activities, it really is divided into three main jurisdictions. So when we refer to the UAE commonly, you would have probably heard onshore, you would have heard a distinction between mainland and onshore. That really is, area except for two financial free zones of the DIFC and the ADGM. And we've got two main regulators here, which is the central bank. Central bank regulates banking activities, and the Securities and Commodities Authority regulates all matters relating to the offering of securities business. Now, the reason why I say it's complex is because we've got two regulators in the mainland, but we've also got financial free zones, which are jurisdictions by themselves, which is the DIFC and the ADGM, which means that each of these sub-jurisdictions are independent. They've got their own regulators, they've got their own legal and regulatory framework, their own commercial laws, and their own court system. Which means that if you get a license from one, it does not mean that you've got a license for all of them. So that's the reason, and the only commonality that they have is that the UAE federal criminal framework applies to each one of them. And for financial institutions, really, it's the AML legislation. But other than that, each one of them is distinct, and separate. And therefore, when you're trying to navigate, such a regulatory space, it is really important to understand which of these jurisdictions really works for you. And this is how I think the UAE really differs from other jurisdictions and other countries, because in most other countries, you'll have maybe one financial or maybe two financial services regulator. So this is what makes UAE fairly complex.
That is, and you mentioned there's no ability to move around between these regulatory bodies. Exactly, that's called passporting. Where does it also prevent where your services can be offered if you're set up, for example, in the IFC, along many of these fintechs are? Does it mean that they're not able to offer their services in other areas?
No, actually, that's not correct. It doesn't mean that they cannot offer their services, but it just means that, for example, like we're in the DIFC, that you're licensed to provide services in and from the DIFC or from the ADGM, which means that if you go to any other jurisdiction or any other country, you have to comply with the regulatory requirements and conduct the business requirements of that other particular country or jurisdiction. But there is no restriction. There's nothing would say that if you're in the DIFC, you can only have DIFC clients. You can have clients from anywhere in the world. There's no real, there's no real restriction.
That's great, and that's ideal for conducting business. Okay, this is it. I mean, the next thing is because the technology has moved so fast in recent years. How has the regulatory framework sort of evolved to keep up with that?
Okay, so I think when we look at fintech and how fintech has sort of evolved, in the UAE. I mean, if you look at fintech is now an integral part of, is an integral part of banking, and it really, if you look at the fintech MENA market, it's expected to grow by leaps and bounds over the next 5 to 6 years. I mean, we're already seeing a very high volume. The way I look at it, fintech is not really a vertical in banking anymore. It really cuts across all areas of, of banking, whether it's retail or consumer banking, lending, the security side, and more importantly on the payment side. And in the UAE, I think governments and, in the broader MENA region, governments and regulators have taken cognizance of this. And in fact, if you look at it over the last, especially from the pandemic times, there's been an impetus, they've been issuing a lot of legislation and regulation, which is fintech dedicated. So, I mean, if I was to look at the regulatory framework, let's say in the mainland, the central bank introduced 11 new financial activities last year to the year before that. The Securities and Commodities Authority, they revamped their entire rule book and also catering to include digital trading platforms and OTC derivative platforms. In a similar fashion, the DIFC introduced new activities, which is the provision of money services, and also we've seen a lot of firms doing like robo-advisory or digital private wealth management solutions and investment platforms really being introduced. And FSRA has always been at the forefront of regulation of virtual assets. So you see each of the jurisdictions have actually made, it has grown by leaps and bounds. And I think the one substantive change that I have seen, especially in the mainland UAE, is the fact that one of the biggest hurdles used to be dilution of ownership. And the new legislation which has been issued has now made it possible to really set up with 100% foreign ownership. This has always been a concern. And now, I think that's one of the biggest opportunities, and this has actually resulted, I mean, in a lot of global players just looking at the UAE and wanting to have headquarters here compared to the rest of the GCC.
I think you're 100% right with that, and it's fantastic. You see all the big names are setting up offices here to service the region, but also just here. And the other thing, it's great that the regulation has been keeping up with the fintechs, because all of the platforms which you described are making financial services more accessible to more people, and that's a beautiful thing. It's something that that everyone needs and everyone benefits from that. I'm just going to jump ahead here because we're talking about the fintech industry in particular. Where do you see the most traction in the fintech industry, locally and also potentially internationally?
Yeah, so I think without a doubt, it's got to be in the payment space. I mean, fintech, as I said, it's not just, sometimes when we think about fintech, people just associate it with payments, but that's not really the case. But I think that's the one area where we've seen immense opportunities, and followed by regulation of crypto and virtual assets. And if I was to give you an example, I mean, if a couple of years ago, all the regulation catered around just having a very traditional bricks and mortar model. And, we had global players who wanted to enter the market, but there were no opportunities. And then we saw, the DIFC and the ADGM, they're the first ones to open up and introduce money services, and especially in the payment space. But now, if you've looked at the last couple of legislation which has been issued by the by the central bank in the payment space, it's digital, funds transfer, payment aggregation, merchant acquiring, open banking. It's all pretty much catered, around the payments industry.
For sure. I mean, I've seen a lot. I believe there's some 100 fintechs registered here in DIFC alone.
Quite a few our clients.
Yeah, I'm sure. And it's great because I'm seeing a lot of them creating new investment platforms and everything. But payments is certainly at the heart of a lot of it.
Yeah.
Tell me something. Do you come across some particular misconceptions about the UAE regulatory framework that you see time and time again?
Yes, we do. I mean, I'm not going to go into details of of all of them, but I'll just try and highlight a couple. And I think the first real misconception is what we touched upon briefly, in your first question, is the fact that if I have a license from let's say X, or let's say the DFSA, does that mean I can do this passporting, and does that mean I can do business throughout the GCC, or does that mean I have a license from the UAE? So I think it's very important to sort of do your due diligence, do your homework to understand what jurisdictions works for you, and to understand very clearly that if you've got a license from one regulator, it does not imply that you get an automatic approval and license from all the other regulators. You do have to understand and approach how you're going to conduct your business so that you don't breach any other regulators' regulatory requirements and face some enforcement action. That's, I think, the first misconception. And I think the second very common misconception is that if there is no license, or if something is not adequately regulated, does that mean it's permitted? And we see that, I mean, on the face of it, it appears that it's a very obvious answer, which is no, but you'd be surprised by the number of queries we get, and who really do think that if something, if there's no particular license for a particular activity, it means that we're free to do that, and that's not really the case. And lastly, flowing on from that is, please ignore competitors and please ignore market practice. There's no such thing as market practice where we'll see, where you come across, entity A or startup A is doing this. They don't have a license, but they've set up shop and they're doing it. So why can't I? Why do I need to get a license? And the fact of the matter is, regulators do watch out. Regulators, you'd be surprised, they are very well aware of what's really going on in the market. They've got their eyes and ears pretty much open, and they do take enforcement action. And it's a big reputation risk. So I would say these are three common areas, common misconceptions that we see all the time.
Yeah, that's great. Thank you for sharing. And I think, just to add to that, I think that's a really good thing, especially in a place like the UAE, where you have people from all over the world, all kinds of business. The point of these type regulations is to make sure these services are there and serve customers, and these regulations are there to protect them.
That's actually, I think, just to take on from what you sort of said, is the fact of the matter is that if you look at the fintech ecosystem, most of the players, I would say quite a handful of players, are targeting retail consumers. And they are the ones that need protection. Absolutely. They need consumer protection. They are the ones, not, it's really a risk-based approach. And therefore what regulation and legislation does is actually not only protect you, because you're really getting from a regulator guidance on how you should be conducting your business. And if you are doing things in accordance with guidance provided to you, you should feel protected that you're doing something correct. And on the other hand, it is, a consumer feels better protected, better secure, and would want to interact with you rather than somebody that's not regulated. And in fact, that is really going to increase your business. And the other thing that we see is, is globally, if you want to have tie-ups with partners, actually having a license and being regulated actually does wonders for you in terms of maybe getting funding, in terms of just having general partnerships, whether it's from a finance side or any other side, but actually having a license and being regulated could be at an advantage for you.
Absolutely, and I can never stress the importance of making sure that's done properly, because just sadly speaking, especially when it comes to retail products, financial literacy globally is lower than I had it to be. And a lot of fintechs, they can position themselves very well, but they really want to make sure that the regulatory side is covered so that the consumers are protected.
And that's actually been the focus of the regulators over the last couple of years. I mean, the central bank drafted its own consumer protection framework, independent of the UAE federal consumer protection framework, and it's fairly detailed. And so, and one of the focus areas is to ensure financial literacy and protection of consumers. So yeah, that's, as I said, that's a very important sort of goal and focus area of each of the regulators.
Which is good, because we're bringing, by we, I mean the fintechs are bringing a huge number of new services to retail customers, and they need to learn about them and the risks, which actually brings me to the next thing is, what about security? The security space, where you have a lot of new investment platforms. So there has to be, you talk a little bit about the regulations around.
Yeah, so in terms of the regulations, as I said, the central bank is only regulating, payments in the mainland. But if you look at the DIFC, I think the DIFC and the DFSA really have been at the forefront. I mean, if you look at some of the newer products and services, whether it's robo-advisory, I think the first robo-advisory license was issued by the DFSA. If you look at digital wealth management platforms, well, the DFSA has issued a license. If you look at general trading platforms, if you look at OTC derivative platforms, the DFSA really has already issued these licenses, and is really a step ahead. When we look at the ADGM and the FSRA, I think FSRA has been at the forefront in terms of regulation of virtual asset services. If you look at the crypto space, crypto exchanges, and in that context, offering of security tokens or custodians and investments, again, the FSRA has adequate regulation. And ESCA, again, as I said, they changed the regulation to include crypto regulation, I think in 2020, regulation of security tokens, as well as OTC trading platforms, and quite a lot of global players who actually, and even regional players who actually have applied to ESCA for obtaining a license and are in the process. I would say probably in the next quarter should be, you'll see quite a few licenses being issued.
That's fantastic. That's fantastic for everyone here, right? We get to get access to more things. Let me jump ahead again while we're talking about virtual assets. Is the UAE ready for crypto?
I think the UAE, in fact, has been ready for quite some time now. As I said, FSRA issued legislation many years ago, FSRA and the ADGM. And if you look at some of the global players, you have crypto exchanges already set up. So FSRA has already had a regulatory regime. ESCA introduced its framework in 2020. The central bank in 2020 and 2021 introduced the retail payment services and card scheme regulation. to regulate the offering of stable coins and utility tokens, and also issuance of stored value instruments involving virtual assets. So you see, and I think the buzzword these days, VARA, I'm sure everybody's been hearing about the Virtual Asset Regulatory Authority, which is, which was, I think, Dubai Law number 4 of 2022 recently, which is recently set up. I mean, look at Dubai. They've just taken, and they've set up a complete regulatory authority whose focus will be to sort of regulate the offering and issuance of virtual assets. And, I think they've already pretty much, I don't know the number of MOUs they've already signed, probably, I would say, upwards of maybe, I don't have visibility, but I would guess it's upward of, more than 50. So yeah, I mean, I think the UAE, as I said, is more than ready. And I think the only other jurisdiction in the entire GCC that I see even competing with the UAE is Bahrain. Yeah, but in this space, what I anticipate, I think there'll be more streamlining of of regulation, because one of the issues that I see is not so much as lack of regulation, but I see it's a problem of plenty. So you've got now 5 regulators, okay, that are in different ways and forms regulating, the offering of crypto assets. And I think for anybody who's looking to enter this space, it is very, very important that you've done your homework to first understand which regulator regulates what kind of activities in this entire, I would say, crypto universe, and then decide what really, what really works for you.
Can I ask it's great how far the UAE's come with this new asset class, to protect consumers and so on. But where would you say the UAE stands in terms of regulation in this sphere compared to somewhere like the US?
I think the UAE is actually doing fairly well, because this, and due to associated concerns, I mean, we can't discount the fact that this is an area where one of the biggest issues is AML and money laundering, okay? And if you look at the associated risks, high risk, and the kind of products, are they suitable for, are they suitable for retail? Does the average Joe walking on the street, does he or she really understand what the product is? And we're not talking about simple, oh, can I buy this, can I buy Bitcoin, or, I want to buy this currency and all. We're talking about now the world has evolved, and, you're looking at the kind of products. Is staking okay? Is earning okay? I mean, it's evolved and it's become so complex that I think jurisdictions and regulators all over the world are struggling to catch up. So I don't think this is a very evolving space. And when I look at the UAE, I think regulation, advice or opinion we may have issued even, I would say 5 or 6 months ago, is no longer relevant. But these are areas that regulators in each country are grappling with. But I think the UAE has really taken the bull by its horns, and it is marching ahead.
I'm seeing that day to day. And yeah, the framework has to change very quickly, because the tech is changing very quickly, the product. And yeah, the UAE said, right, we want to be at the forefront of this, and 5 regulatory bodies surrounding this. It's amazing very quickly. And that is one of the advantages of doing business in the UAE, is things can move very quickly. Let me one more question here regarding to fintechs. So what options are there for a fintech intending to operate and set up in the UAE?
Yeah, so that's actually a very good question. And I think the one thing we always tell our clients is similar to commercial due diligence that you would conduct before you enter any market. In a similar fashion, you have to do your homework, you've got to do your regulatory due diligence, firstly to understand if you're even conducting, if what you're doing, if the product you're offering or the services you're offering, is it even a financial service? I think it's very, very important to first understand that or are you able to get, to take advantage of any exemptions in the regulatory framework? Give you some examples. When it comes to stored value instruments, each of the regulators clearly understands that closed loop payments, which is what, if you look at all your, if you go to any department store and they're, you can use their app and, you can pay them up front and you can redeem that to buy products as you go along. That really is a payment product. But because you're only using that money or that pool to purchase those products from from the issuer of the of the stored value, that's clearly exempt. So again, non-touching of funds, the regulators have made it very clear. Data authentication is exempt. Technology service providers are exempt. So it's very, very important to really understand, if you first of all really need a financial services license, it's not always the case. But if you have done that analysis and if you feel that yes, I may require a license, then I think I would probably just look at 3 ways to approach it. Firstly, if your product is something very unique, if you're a startup, maybe you can try taking advantage of a sandbox and trying and obtaining some kind of a testing license, which probably you could take advantage of maybe for a year or 2. I think that's a very, very good option. The second option, which again I think is very, very important, is look at maybe partnering with a financial institution or a bank. Someone like probably, I don't know, CBD. Yes, and I think that, and I think that's really, really important. And when do you really look at that option is when you're still not sure commercially if you want to have a substantive office space, full team here, and have a lot of, you want to invest that kind of money here, but you're not really sure of the returns that you may receive. Or if the framework is not very clear and a license for your particular product or service may not exist, then rather than trying to just sort of set up without a license, a better approach would be to just try and see if you can partner with a bank. And I think the other advantage of that is, banks are generally exempt from certain type of licensing. They have the experience of interacting with regulators, and you can bank on their, you can take advantage of their infrastructure, systems, and also, policies and AML, you can rely on them for AML purposes.
For sure.
And I think the last option, if the other 2 don't work, is then I think you have no option. If you do need a license and you've got nothing else, you have to apply for a license. And if you're going to apply for a license, some important things to consider: you will have to set up here. The UAE doesn't afford, a scenario where you could be sitting outside and you could directly get a license from a regulator. You will have to set up, have substance here. You will have to set up, take space here. Have to have a full team here. And any kind of license would take you at least a year to year and a half, to obtain. So you've got to be aware that lead time, and you've got to manage your resources adequately.
One thing you touched on just now was testing sandboxes. Can we elaborate a little bit on that? Because for any fintech or any company that's launching financial products, they need to test in a semi sort of live environment with real customers.
Yeah. So I think the ADGM offers the RegLab, and similarly in the DIFC offers an innovation testing license program as part of Fintech Hive. And I think for startups, the advantages that they get, they get to test their products and to develop their products and services under regulatory supervision and mentorship. And this could be for if you're lucky enough to be part of a cohort, this could be maybe for a year, upwards of 2 years, which gives you enough time to sort of just test your, test your products and services, and thereafter it's a more fast track approach. If you're not successful, well, that's the end of the story. That's the end of the story for you. But if you're successful, and we've seen quite a few successes who've been able to convert the testing license into a full-fledged regulatory license similar to any other financial institution.
That's fantastic. And you talk about the support and the mentorship. That's invaluable at that sort of very pivotal stage for a financial company. I'm just going to go to one last question, but before that, if anyone listening has any questions for Divya, please do write it in.
A couple of questions that have popped up.
All right, yeah, okay. We'll come to those in just a minute. I'm just going to ask you one more question, and that's, what regulatory changes do you foresee in the near future, and in the UAE and potentially across the MENA region?
Yeah. So as I said, the technology is changing at a very fast pace. The fintech ecosystem, the way I see it, it's very dynamic. Okay, and there will always, and I don't think they will ever match up, but there will always be a gap between the products and services that you're going to offer in the fintech space and supporting legislation.
For sure.
Always. Which means that, and I'll give you an example of a product. I don't know if you've heard of Buy Now, Pay Later.
Yes.
Or BNPL. Now, BNPL is one such product which is sort of just, I would say, over the last couple of years, it's wherever you see, it's all over the place in the UAE and across the region. Okay, and the question is there a license specifically for such products? And the answer is no currently, because it's still out there in terms of, is it a lending product? Is it something a finance company should do? Or is it more, a fintech product, and therefore there needs to be legislation specifically catering for that? So I think one of the areas where I do see, and I hope to see, I mean, I can't predict it, but I would hope to see legislative change is surrounding the regulation of BNPLs and similar such products and services, especially in the alternative payments space. In addition to that, I think we probably will see a lot happening in relation to open banking. The central bank, the DIFC, and the DFSA and the FSRA do have legislation, but I think we can expect to see a lot more as far as open banking is concerned, RegTech, and again, InsurTech. I mean, insurance, as a business, it's very interesting because the regulation of insurance, which is with the insurance authority, the insurance authority has now merged with the central bank. And therefore, the regulation of insurance, okay, you've got one, has come under sort of, it's still a separate department, but it's now merged with the central bank. And how we've seen regulators being at the forefront of regulating fintech, I think we're going to see a lot more in the, similarly in the InsurTech space as well, where there could be regulation dedicated, to deal in, for players in the digital space, rather than having to obtain, again, a formal, as I said, a bricks and mortar model.
That's fantastic. I look forward to there being more open banking, more InsurTech, opening up in the region. That's great for consumers.
Yeah, and I think to answer your question about the region, so it's all growing at a different pace. But as I mentioned previously, I think, as I said, regulators and governments throughout the broader MENA region are waking up. I mean, when I look at Saudi, I think Saudi has said they want 70% digitization by 2030. Egypt has just issued, framework or regulation in the law in the payment space. Qatar has just issued something. Bahrain, again, Bahrain legislation, Bahrain is always competing with, with the UAE. So I don't believe that any jurisdiction as such, I mean, it's a risk-based approach. As I said, when it comes to crypto, the crypto space, really, it's just the UAE and Bahrain. But other than that, when it comes to, payments or in the security space, each of the jurisdictions in the MENA region are taking cognizance. And what we as a law firm are seeing, because we've got a regional practice, what we as a law firm are seeing is that players are not just looking at one region or saying, okay, we'll only look at this. What they want is a seamless approach on how they can really service, because how are you really going to make money is really looking at the region in its entirety. And the maximum, I think what we see is UAE, Saudi, Bahrain.
That's fantastic. And it's, especially useful to talk to someone who's plugged into the whole region to learn about it. And just to go back to what you were saying about BNPL, it's great, but I do look forward to seeing more regulation or something on that, just because it is a retail product and it's giving a lot of people easy access to credit, and it just needs to make sure it's done properly.
Yeah. So and that's just not just for BNPL, but this is what I always say. You've got to do your suitability studies and you've got to do your due diligence and just have a very practical approach. Look at look at the technology, look at your operational model, look at your funds flow, and where are you touching monies and operation of bank accounts, and what is it that you're doing, and what is it that the regulators really, when we put our consumer protection hat on, what is it that a regulator is really concerned about, and what are they trying to sort of protect? Look at your contractual arrangements and just see. Because what we also work on, I mean, while we're supporting you with obtaining a license, what you can also do is to understand really what is it that the regulators worry about, and how you can maybe restructure your product or service in a way that you're taking out maybe one or two tricky bits and are able to maybe set up in a non-regulated manner. I think that is also something that is very important to be considered.
Absolutely. I'm just going to jump into some questions from the audience here. Let me put that up. Fantastic. While we were talking about this, someone has asked about how BNPL is different from normal lending. Would you like to describe that?
I'd be happy to take that offline, because as I said, that is something that we look at very, 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 very closely, and we've got our own ways of how we want to sort of how we structure it to see what are the parameters where it would not fall within a lending product. But I would say the jury is out there. And I think regulators are in fact looking at it a lot more closely, to see whether or not how they can sort of not consider this to be a lending product. But this is, as I said, this is a fairly technical analysis that we do conduct, and I'd be happy to sort of discuss this separately.
For sure. On a very top level, I would add that the difference between most lending products is there's a lot more history taken on the consumer, on their credit ratings and so on.
I'll give you one hint. I won't put all my cards on the table, but I'll give you one hint, and that's, I think, the charging of interest.
Yes.
Traditionally, if you look at a loan or a lending product, and if you were to look at legislation, one of the parameters of a loan is you're giving your money for the purpose of, with the intention to make money and to charge interest. And some of the products that we've seen, that's an element that's missing, and that's one of the I would say points to sort of focus on. But as I said, I'm not going to lay all my cards on the table.
That's fine. And BNPL earns in a different way.
Yeah, it's a different product.
I'm just going to read through a couple of these questions and see if we. Many people writing in to say thank you for your advice. So this is an interesting question. What about big tech entering the market with their payment products? For example, Apple and their payment processing and their credit cards.
Yes, and that's something that is going to happen. I think we've seen a paradigm shift in in the kind of I would say entities that are in this space. I mean, financial institutions and banks are facing competition. Okay, fintechs have been disruptors, and when we look at it, we're also looking at global players, whether it's the likes of Amazon or whether it's the likes of Apple or the likes of Facebook, but they're all entering this space, and that is something that is happening globally, but that is something that is, in my opinion, it's a matter of time, when we will see a lot of these players here.
Absolutely, I do see them coming. I'm going to just take one more question from here, and it's something we touched on a little bit, but I'll just sort of add to it. Someone's asking about open banking. What would you say is a timeline before you see true open banking across the UAE?
I mean, I can't really put a timeline to it, but as I said, it's a very topical, it's a topical subject, and I do believe we've got somebody in the DIFC who's doing that. But on the other hand, the legislation is there. So that's as I said, that's the point. The legislative framework is there. It really depends on players wanting to take advantage of the framework, having a discussion with the regulator, having a conversation with the central bank, and seeing how they want to sort of progress, and really seeing how they can sort of utilize data and make money out of it.
This is interesting because this whole discussion we've talked about how the technology happens and then the legal side catches up.
Yeah.
Now, in this case, you're saying for open banking, the legal framework's in there, but now the technology needs to come.
No, I would sort of disagree, because it was always there. It's as I said, to me, I would call it probably a new age industry. It's a sunrise. I would say it's a sunrise industry. It's there, but on the other hand, the framework is also there. So I don't really see any reason and why. But then, as I said, we don't know because these are not in the public domain. And a lot of them we have access to, because we're supporting so many players in terms of their in terms of their regulatory licensing with each of these regulators that I've mentioned. So we are aware, we are cognizant, but obviously we can't take names. But as I said, every each of these licenses take a year to year and a half to obtain. So you don't know who's already out there, who's really applied for a license, and you don't know maybe another 6 months time who'll really be making a splash in the market.
That's very exciting, and it is a very exciting place to be. The only reason I asked that question is because I'm more familiar with the UK than the US, for example. But in the UK, open banking has changed the banking landscape, especially with fintechs blowing up across the UK. Now, but from what I understand, that came very top down. That was the regulator saying, these are the protocols and these must be adhered to. Whereas in the UAE, I haven't seen that.
So I think that's what I'm saying. I think there will be further, something further issued, in my mind, from the regulators in maybe a year or so's time.
Interesting.
I do expect to see that.
I think so too.
And I mean, not connected, but I think some of the other areas to really, for those that are entering the market to focus on is really when it comes to data and data. I mean, some of the topics that we're really looking at very closely, and I think regulators are focusing a lot on, is on data and data sovereignty and data localization. So I think that's another thing, is if you're looking to enter the market, is really, really be very clear And if you're a player in many other markets and you've got centralization of resources, to see how you'll be able to comply with specific requirements here, where you may have to have systems, independent systems, and store data with.
Yeah, very true. Thank you, Divya, for joining us today. We're gonna wrap it up there. Thank you for joining us. This is Divya live from the IFC at the CBD Digital Lab. For anyone who joined late, I've been speaking with Divya Abrol Gambhir. She's a partner in banking and finance department at Tamimi and Company. We've been discussing regulations surrounding financial services in the UAE. Please do connect with her on LinkedIn, and we do look forward to sharing more with you soon.
Well, thank you very much. Very interesting session, and as I said, it's a topic which is, which is very close to my heart, and I'm quite surprised that I wasn't rambling on, and I was actually able to wrap this up this quickly, because this is such an interesting area that we could probably be sitting here discussing this all day.
Absolutely.
Well, thank you very much.
Thank you.